for right now, let me shift gears to our markets guest, Rebecca Walser, president of Walser Wealth Management. Rebecca, good to see you here on the day. Stocks rally to just squeeze into the positive territory on the day. What were your biggest takeaways from today's trading activity?
You know, I just feel like we are obviously in a need for more stimulus, and you know, the vaccines are only going to take us so far. So until we get some more clarity on what's going to happen before the end of the year, the market is we're going to see these days of uptrends, downtrends, and we're not going to really have a clear pattern, I don't think. What do you think?
What would the markets see as a successful distribution strategy once we finally do get to that level of planning? We know some states are already putting that into their progressionary steps as they consider where they need to meet the need in terms of that vaccine accessibility.
Yeah, well, it's going to depend on how fast the rollout is. So we obviously heard that we could get something as fast as December, but then what does that look like? Is this Operation Warp Speed actually going to roll out? And so now we actually are getting people that are going back out. It all comes down, as you know, Brad, to consumer spending. We're 70% consumer spending driven, and people aren't going out when they're on lockdown. And we still obviously aren't going to concerts, we aren't going to games, we aren't doing a lot of these things. And as the restaurants are now closing at 10 p.m. or completely shutting down altogether with lockdowns, this is only going to really exacerbate, you know, the volatility that we've had in the market and really our outlook until we understand what the distribution of these vaccines look like.
Certainly. So as we continue to watch very closely where some of the stay-at-home stocks, how they're performing during this period in time, of course, when we were looking last week at the prospect of the vaccine and the rollout and the efficacy that we had seen from the vaccine, we saw a lot of the fluttering away and hyper rotation out of some of those stay-at-home stocks. But then as you saw some of the case counts, particularly coming back into focus, we saw perhaps one of the quickest rotations back into the stay-at-home stocks there. How are you kind of hedging some of your bets at this point in time?
Yeah, anytime we have an up day in the market, but NASDAQ is in the red, you know that's exactly what's happening. They're like saying, okay, you know, we're going to go back into luxury, into travel, into, you know, consumer spend. And then obviously when you have, we're locking down, cases are up, we're going to have another sort of shutdown, then we're going to go back to the stay-at-home Zoom and all of our technology stocks on NASDAQ. So this is what we're going to have, Brad. We're going to have this until we get some clarity. And, you know, we still don't have exact clarity on the election. So until we get absolute clarity on what is the actual vaccine that the FDA has approved, we've got 3 now, Moderna, obviously Pfizer. Now we have a third with AstraZeneca. We have these 3. AstraZeneca is a different type than Moderna and Pfizer, which are more, you know, new kinds of vaccines. But until we understand what is the rollout, what is the implications, how many people are going to even take it? You've got a lot of people out there, and even in government, as you know, with Cuomo, saying that they want to test these things themselves because they've been developed so rapidly. So what is the American populace's appetite to take these and then get back out into spending money? And so I don't think we're going to have clarity on that. You see the market shoot up when we get news that we have a successful late-stage trial with a 94% efficacy, but we still need to see how the American population is going to take that, and what does that then mean to the economy?
You know, and it's interesting because consumers, they have shown an appetite, at least, to still engage with some of the very companies that they value highest on their list. And ultimately, through this direct-to-consumer capacity, that's where we've seen companies still be able to succeed. However, that's not necessarily the same case all the time for some of the small businesses that are out there. How much of the consideration do you think that senators and the House of Representatives, Congress as a whole, is going to take in terms of its consideration for small business and that environment versus the companies that have shown that they can trade and really dwell in a direct-to-consumer environment, rather?
Yeah, unfortunately, I don't think there's any economists on Capitol Hill, right? And so I don't think they're taking into account at all. I mean, I think that they think that their job is to make sure that not one person gets sick, and I appreciate that. And every person means everything to everybody, you know, to us. But at the same time, Brad, our economy is not designed for extended shutdowns. And the only reason we're not in a depression right now is because we have had CARES Act and we have had stimulus, and we can't do that indefinitely. We have to get back to open, and small business business engines, unfortunately, those are the ones that have been hurt the most. The mom and pop sandwich shop and the dry cleaner that's in your building that you're not going to because you're working from home. Those, we've already lost 100,000 businesses through the end of September that are never coming back. They're permanently and forever closed. And we don't have enough government stimulus that can bring all those businesses back and sustain us while we continue to be shut down. So the politics of this, I'm actually disappointed because I thought we would do better. I thought if we had a resurgent with the second wave, we would know that this is not the virus that we didn't know in March, and that we would just say, okay, the solution is a shutdown. We've had countries now that have around the world handled this differently. Some have stayed open, some have closed. The numbers aren't that different between the two. And so for the economic cost, the shutdowns are a really poor economic idea. And I don't see that it really does help stop the spread. In fact, it seems just to delay it. And that is probably why we're having a second surge.
Yeah, and it seems like it's a lot of the, as it's been reported and the data has shown, it's been a lot of the rural U.S., central, Midwestern communities that are hit hard by coronavirus, those that skirted that first major wave that we did see. But as this virus has essentially collapsed in on the U.S. from some of the coasts and then still reinserted itself in some of the coasts, you see some of the New York shutdowns or at least advisories that I should say put into place in some of the major East Coast cities at this point in time, and rollbacks as the pause effort has been noted throughout this campaign here in New York at least, and then we've watched out west and in Chicago additionally as well. So all with great intents to save lives, but then additionally, if you were to look at an economy that has parts that actually can thrive during a lockdown or a shutdown, once we pull those into a full reopening, where are the parts of that economy that you would suggest actually can still be successful even as we do fully reopen?
Well, obviously, we were really hopeful that travel was going to come back as the vaccine either is widely accepted and administered, or people are just willing to say that the virus is not enough of a risk not to live their lives after they've been shut down for a year with social distancing and a proper mask use and all those things. So there's a lot of industries, Brad, that, as you know, are really on the sidelines and just waiting to find out what's the resolution. Are we going to go back to more of a normalize what we had pre-coronavirus, or are we in a new normal, and are we really destined to be more remote based, and certain businesses are never going to come back? And that's the question that we don't yet have the answer to, and we really need to get the answer to it pretty quickly, because as you said, there are certain businesses that hung through the first time that certainly just will not be able to sustain another full shutdown.
It wouldn't be an economic conversation if we didn't discuss fiscal policy as well. So let's talk about the Fed for a hot second. Big expectations going into the next year, any at all, and what will Fed Chair Jerome Powell and his team have to discuss as we continue to wade through this?
You know, what I've seen, Brad, is, and you've probably seen the announcement with AOC, she's saying, okay, well, if we get a Republican Senate, we'll have divided government. We won't be able to get the policies passed that we're looking for. So maybe the Federal Reserve is the place to turn to really push, like the Green New Deal and these kinds of things. And a whole new world possibly in role for the Federal Reserve, which really has stayed out of those kinds of things and had nothing on their balance sheet before really the Great Recession and TARP, Troubled Asset Relief Program. And now we're seeing sort of this push to maybe leverage non-elected boards and groups that really can affect policy that they can't otherwise get through, which would have an economic impact. So I'm really looking to see how that is developed and really kind of pushed, and to see what does that mean for the markets, with the Federal Reserve maybe taking on policy structuring that they haven't formally and previously done.
All right, Rebecca Walser, who's the president of Walser Wealth Management, joining us today. Thanks for the time, Rebecca.